Tuesday, January 22nd. We're starting off from the Bitcoin chart. We're doing a daily analysis, daily profile, some key elements to the weekly days, the trading days, and how the algorithm or what the algorithm really does react to. First of all, Monday was, even though we had a lot of liquidity and price movements in large ranges, it was a day off for the banks. So in terms of algorithmic movements, this price range, it wasn't, or it doesn't count in a way, or at least that's how I want to perceive it as. And based on previous analysis on other weekdays that were off, where price, even though it moved algorithmically the day after, which is today, a bank opening day, reacted to previous levels. So in this case, in the daily chart, we want to blur off Saturday to Monday. So we're coming on a Tuesday, price opened here, moved lower to this daily order block. At the same time, we have a breaker block daily, because we have low, higher high, lower low, higher high. So we have this low being taken with market structure shift, creating this breaker block here. So we expect some form of price support in this area right here. But in the closer proximity, we have this bullish order block. And where the price opens here, we have a gap being formed, which is closed with an immediate rebalance over here. In the smaller time frame, we basically want to ignore all of this and start the day over here. So let me just quickly do this globally. And so we have price forming here in the new day opening gap at 6 p.m. Even though banks were closed, electronically it was open. So electronically, some levels are respected. But we do want to highlight the new week opening gap. So electronically, some levels are respected, but during the day, the sessions are a bit mixed, especially in New York session. So we have Friday price closing over here, new week opening gap high, new week opening gap low, and new daily price opening at 6 p.m. So what we start off with is Asia coming lower. And where does it come to? It comes to that daily order block into that day's new day opening gap, touches it, goes for maybe the upper quadrant, doesn't go for half of that gap, and so the displaces higher. In this displacement, we have change in the state of delivery with a gap being formed. Price finds support, moves higher. Where does it move to? It moves to the new day opening gap, current new day opening gap, with bodies respecting its midpoint. And it moves to this New York opening range, 15-minute gap from Friday, previous day, which acts as resistance. And this is only a short-term resistance, as price only retraces to this range's optimal trade entry. We can see golden Fibonacci ratio, and price moves higher. At this time, it creates a midnight opening range gap with its, in the 15-minute, having a gap right here, and in the 5-minute, no gaps, one gap right here, movement lower. So in the 5-minute, I want to see this price, if I'm bullish, get first respected, then disrespected. If I'm bearish, I want to see it get respected and move lower. In this case, price respects it, takes sell side in the 5-minute, moves higher, coming back to this fair value gap, and respects it initially. Time is 1 a.m. I want to wait for 2 a.m. for London session to open. And as 2 a.m. comes, price finds itself above this fair value gap and above this order block, which indicates a change in the state of delivery, market structure shift, because it's the largest 5-minute block. Moves lower, takes sell side. No, it actually doesn't take sell side. Takes this over here, but it does change market structure. So we have high, low, high, low, high, high, higher, low, high, high, breaking structure over here. So we have bullish sentiment with new midnight opening range gaps being violated. This one gets violated too. So at 2 a.m. we see one fair value gap created here in the London session. Right now we're in London session. I want to see it get respected. We have one order block with a wick. I want to see it get respected. I want to see this 5-minute inversion fair value gap created now get respected as well if price comes down to that inversion. And price moves. I want to wait for entry between 3 and 4 p.m. AM for London Silver Bullet. We see price coming lower. At 3 a.m. it comes down here to this fair value gap. Body stop in this inversion fair value gap. So we have low, higher high from this high, lower low, higher high, change in the state of delivery, causing this breaker to form over here where price finds support. So from this point on, if we have entered below, or we have entered here, I don't want to see price come below this point anymore. And I want to aim for first this high that reacted to this, because now I'm bullish. And first level of resistance is this new day opening gap, which was repriced to the midpoint, is this previous day New York opening range fair value gap, which was repriced to. So if it already was repriced to, I want to see this level get validated, and I'm long-term bullish, going for new week opening gap high or going for all-time high. So first off, I want to go for midpoint of new week opening gap with a 127 and targeting the Asia highs. So I want to see price fail come below this point. And in fact, it doesn't come. It hovers again into this point over here, finding support in this 15-minute fair value gap. And again, bodies find support in the 15-minute fair value gap, goes again, finds again, lower again, moves higher. So I'm going to delete the risk to profit reward, because that's not what I'm focusing on right now. I'm focusing on analysis and understanding how the market moves. And price is at 5 a.m. entering the new day opening gap. Reacts to this midpoint and fair value gap from Friday's New York opening range gap into the new week opening gap. And I want to gradate the midpoint of it over here. Reacts price first, moves lower into this fair value gap. I want to see how exactly it moved here. Alright, so it reacts to 50%, retraces to this 5-minute order block, moves higher, violating the new week opening gap. And price is already this high at 7:30. So right now I'm coming into the charts, waking up. And what I see is I'm trying to build a daily profile. So daily profile, we have Asia moving to run liquidity. Liquidity being this imbalance fill. So it doesn't really run external liquidity. It runs internal liquidity through imbalance, through filling this gap and going into a new day opening gap. And tapping into higher time frame PDRA, which is a daily order block and the daily breaker block into that range. And actually I'm gonna measure this bodies. All right, so where it drops to is slightly below the midpoint of this breaker block. Anyway, so we have Asia coming lower, tapping into higher time PDRA. This place is higher, change the state of delivery from bearish, which is moving lower, to bullish over here. Change the state of delivery. Find support, moves higher, retraces to optimal trade entry of this to golden pocket of this range. Find support in the smaller time frame, change the state of delivery again to bullish, and moves higher above all the resistance zones that can possibly cause price to move lower, which are the midnight opening range gap, pierces through it, is the new day opening gap, goes through it, the previous day New York opening range gap, fair value gap between 9:30 and 10 a.m. goes through it, into the new week opening gap, goes through it. And right now I'm coming into the charts and I want to try and understand where price is going now. So what do we have is Asia coming lower, taking or filling imbalance. London changing the state of delivery, moving higher. So I expect New York to continuate in the direction of London, which just changed the state of delivery to bullish. Furthermore, in the daily time frame, we are bullish as of we're reacting from bullish breaker and bullish order block. In the monthly time frame, we're moving higher and we're very strong. And in the weekly time frame, we're also just considering bullish moves because we tapped into this weekly gap. And as soon as we touched it, moved higher, breaking this candle's high, changing the state of delivery to bullish, breaking this candle's open again, changing the state of delivery to bullish. So we are gonna expect higher prices and continuation. So we're encapsulating all these elements to come down to a conclusion in the New York session. So we have right now determined a directional bias, which is to the upside. And once we do this, I want to see areas or levels or elements where I think price should be supported if it decides to retrace during London. So one of them is the new week opening gap, first of all, being this one right here. I expect price to first off find support in its midpoint level, or maybe upper quadrant or lower quadrant. Second of all, the bullish order block from the 1 hour failure swing, which is this one right here in the 1 hour. So this bullish order block. And at the same time, it's a fair value gap over here, 1 hour. And this breaker block, but it's the same. Well, it's in the same range. Even though what can happen, like sometimes usually happens also, is price only reacts to this wick and doesn't go all the way through to this order block. This fair value gap, I want to expect now to act as inversion fair value gap, which is the New York opening range fair value gap. I believe it's a 15 minute, but it could be a 5 minute. But price I expect price based on previous days and previous analysis and backtesting. Price finds reaction to these levels. I have this gap right here, which is right above the new day opening gap. I'm sorry, the new right below the new day opening gap. And where is the new day opening gap low? Here. Fucking so many things. Which is in the upper quadrant. Exactly. So these are these levels. What else do I have? New day opening gap, midnight opening range, discount. Yeah, I want to also consider the range formed from London to right now. I want to buy in discount. So price can come up to here, but this is still premium considering the range. It has only moved high, no retracement lower. So I want to buy it below this 50% in discount, which perfectly correlates with the 1 hour fair value gap and the failure swing bullish order block. It's a failure swing because it failed to take this low. Usually what before has happened, what I was waiting for was price coming lower, moving higher, then a lower low before moving high again. So this is one scenario I would always wait for, and price would simply do this one right here, and I would just wait for it forever, and it wouldn't just create it would just continue higher. This is model 1, this is model 2, model 2 being formed, and I will still expect for it to find some retracement here. Price is at this point at 8 a.m. So what I'm doing right now, I'm just sitting waiting for retracement. If price moves on without me, I'm fine with it. It's all right. I accept it. I just don't want to buy in premium. Right now is in premium. I'm just not comfortable with it. We have the all-time high over here on Friday, or at least the previous highest point. That would be a target, first target, with possibly price moving higher again to these electronic trading hours on Monday of 109 something. So we go again into the 15-minute. We have the levels. We delete some of the noise. This we delete here. Possibly delete the old gap as well, because we have an idea that price will find some resistance here. But we continue to hold it as an idea of overlapping levels. And price does come strongly below into discount, below 50%. Into 1 hour order block, into 1 hour fair value gap, into 15-minute fair value gap, find support, moves higher. Now, as it is in this level, I want to drop into the lower time frames and see signs of the change of the state of delivery from bearish, as it's moving lower. I want to see signs of like this, change of state of delivery. Bam. Support, higher, support, higher. So this right here, I want to see the price, reflecting price. And that can happen again through two models. Through this model with a run on liquidity, or through the failure swing model with SMT with Ethereum, where Ethereum does model 1 and Bitcoin does model 2. So in this case, we have price come lower, low, high, low. This can be considered a high, but it doesn't continue. It's only 2 candles bullish compared to this 1, 2, 3, 4, 5, 6. It's continuous bullish candles which show algorithmic sponsorship. And price does take liquidity over here. probably just takes it by the tick. This price right here, low, it's 102,804. 102,800. So it takes liquidity, moves higher, changing the state of delivery. We can count the wicks. We can also count the bodies, where the bodies close above. We have 1 minute inversion fair value gap. We have big fair value gap form. Price finds support, moves higher again. Price finds resistance here, filling this gap, comes back. Where does it come to? Bullish breaker block or 1 minute order block after price has changed structure again over here. Finds support, moves higher. So we can decide anywhere right now in this moment to be a buyer. We can be a buyer right here and risk it. We can be a buyer right here and risk less, putting the stop below this low or the stop below this inversion, 1 minute inversion midpoint, with target being all-time high or even higher if you want to let one run. We can be a buyer right here. Again, 1 minute inversion fair value gap. Price finds support, moves higher. As it finds support, respects bullishness, moves higher, change in the state of delivery, which can be seen clear, let's say in the 15 seconds. So we have high, then low, 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 low. Take liquidity with this. Displays higher, change the state of delivery. Bam. Oh, fuck. Retracement to order block or breaker block. A bit of higher risk, but then we expect price to what? Move higher. Does it really move higher? Of course it does. It fucking rips it off. When does it happen? During the 10 and 11 hour macro entries, or both in the between 10 and 11, and price moves higher until 11 to 15. We can decide now, yes, it broke structure. We can decide one thing: we want to keep it going, or we want to close it right now. If we want to keep it going, we expect support in this inversion fair value gap in the 5 minute, or in this one right here in the 15 minute. But nonetheless, in the higher time frame, we have change in the state of delivery. Definitely extremely bullish. We can choose to hold for higher prices, and in fact it does. So price finds support in 5 minute inversion fair value gap until at this moment in price right now, where it's just moving or consolidating. It's 5 p.m. right now, so price will be a bit slower than usual, but it might resume during Asia. So in a nutshell, we have higher time frame, the weekly supporting higher prices, the daily supporting higher prices, the session with daily profile with Asia doing the opposite of the daily, or at least one session doing the opposite of the daily direction. In this case being Asia, which rebalanced, tapped into higher time frame. London changed the market structure, changed the state of delivery to bullish from Asia's bearishness, and with New York continuing higher. And we also discussed how we can frame an entry based on gaps and levels that react most to price based on previous backtesting, like in the previous week as well. So this is it for today. I hope you made some money. I hope we can use this information to make money in the future. And most importantly, stay patient, especially in moments like here. Let's say you come at the charts at 7 a.m. You had to wait all the way to 10 a.m. 3 hours waiting just for this price run. You could have entered short here maybe, but that would be against the directional bias and a bit riskier, and that would blur the viewpoint of levels that would support higher prices. So patience key, trusting the model is key. may be a bit scary to go just enter long right here, especially after this big large down move. But that's why we backtest, that's why we make these videos, and that's why we study old levels and how these old levels can react to price. Right? Peace out.